Welcome to today's episode of Dollars and Cents. I'm your host Azim Merchant, and today we'll be talking about the Pakistan Stock Exchange, the recent monetary policy announcement, the FX market, the gold market, and the oil markets. So let's jump in. Despite a terrorist attack on the PSX in Karachi today, the benchmark index stood strong as it closed up 292 points, marking a day-over-day uptick of 0.7% and exceeding 34,000 points. Participation remained dull as traded values fell by 17%, while volumes fell by 21% day-over-day respectively. Foreigners yet again managed to remain net sellers as the foreign portfolio recorded net outflows worth USD 1.2 million. A downtick in international oil prices owing to concerns over rising COVID-19 cases weren't well received by the E&P sector as Pakistan oil fields marked a decline of 0.3% day over day, while OGDC and PPL portrayed muted growth. Other index movers included Lucky Cement, MCB, and Engro, which rose by 1.7%, 0.6%, and 0.1% respectively. On a similar note, having a look at the interest rate trends, the interest rate was at a high of 13.25 at December 19 end. In an attempt to spur economic growth, the Monetary Policy Committee decided to slash rates twice in March, followed by two cuts subsequently in April and May, bringing down the policy rate to 7% from a high of 13.25% at December 19, marking a cumulative year-to-date reduction of 625 basis points. So far, around 566 billion worth of loans have been deferred, 113 billion worth of loans have been restructured, while loans worth around 113 billion have been approved for wages. Additionally, as the interest rate was at a high at this point in time, those banks that managed to build up their PIB books have done an excellent job of building up their accrual books and will be enjoying greater interest income in a low interest environment. I'll be doing a separate video assessing the investment mix of the top 4 banks in Pakistan, so stay tuned for that. Let's switch gears and talk about what happened in the FX market. The rupee continues to weaken against the dollar as it closed at 168.2 today versus 167.7 on Friday, marking a decline of 0.3%. Rupee's weakening extended towards the euro as well, as the rupee marked a decline of 0.6% versus Friday's close of 188. Looking ahead, additional inflows from the World Bank and the ADB of around USD 1 billion would help ease off the pressure on the weakening rupee. Let's see what happened in the gold market. Gold edged up yet again, closing at USD 1771.6 per ounce, marking a day-on-day uptick of 0.2%. Investors sought the safe haven metal owing to fears of rise in COVID-19 cases globally. Additionally, lower interest rates, greater stimulus packages from central banks coupled with uncertain macros would keep demand for this precious metal high. Moving on to the oil markets, despite efforts by the OPEC to reduce supplies, US crude closed down at USD 37.8, marking a decline of 1.7% day over day as COVID-19 cases rose in the United States, followed by a decline in Brent crude, which also closed down at USD 40.3, marking a day-over-day decline of 1.8%. Looking ahead, global markets are expected to remain cautious over fears of second wave of the coronavirus pandemic. If you found the information to be useful, be sure to like, subscribe, share, and comment. See you all in the next one. Thank you for your time.